Hey, welcome back to the channel. Today we're going to dive into something so basic and very essential, the stock market. If you're a beginner or even someone who just wants to start brush up on the basics, this video is for you. We're going to cover everything from understanding stock prices to long-term investment strategies and even tools like ETFs. So let's demystify the stock market together. At the base principle, stock markets are very easy, even though they may seem confusing at first. The goal, to buy stocks at lower price and sell them higher later on. Sounds simple, right? But how do you know which stocks are going to rise and which might fall? Well, the price of the stock is all about supply and demand, right? So if tomorrow a company like Apple announces a revolutionary new product, the demand for Apple shares might skyrocket, pushing its prices higher. On the other hand, negative news or poor performance can cause the prices to drop either. Short-term investing may sound tempting at first, but buying and selling stocks within days or even hours. But for most of us, it's very risky, it's stressful, and time-consuming. Even legendary investors like Warren Buffett advocate for long-term investing, where you buy shares in the strong companies and hold them for years and let compound interest returns do their magic. Think of long-term investing as planting a tree. It takes a lot of time for the tree to grow, but the rewards are so worth it, my friend.
So what's the secret to reducing risk? Diversification. Instead of putting all your money into one company, spread it across different industries or even entire markets. And here's where ETFs and index funds come in place. An ETF or exchange traded fund is like a basket of stocks. For example, Vanguard S&P 500 ETFs include shares from the top 500 companies in US. With one purchase, boom, you're instantly diversified. ETFs are easy, cost-effective, and require very little maintenance, making them a favorable asset for passive investors. So how much can you actually earn from the stock market? On average, you can accept 6 to 10% annual return. So if you're investing for the long term, not bad, right? But remember, market crashes are inevitable, and that's okay. What matters is staying patient and keeping your focus on the big picture. Here are a few golden rules to help you get started. Number 1, invest what you can afford to lose. Don't gamble your rent money on investments. Number 2, buy the dip. When prices fall, it's often the best time to invest. And number 3, do not panic. Market fluctuations are normal. Stick to your plan. Panicking is what differentiates between a professional and an amateur. Don't be an amateur, be a professional. You'll see plenty of promises for high returns and quick gains. Be cautious. Apps like Robinhood and Webull have made trading very easier, but they've also made it very easy to fall into emotional traps. Do your own due diligence. Research before investing and never follow the crowd blindly. Alright, it's time to take action. Open a brokerage account, whether it's Vanguard, Robinhood, or another platform, and start small. Even investing 10% of your monthly income can grow into something significant over the years. Remember, this is a marathon, not a sprint. Thanks for watching. If you found value in this content, hit that like button and subscribe for more content like this. Let me know in the comments what's your biggest takeaway from today's video. Until next time, stay curious and keep investing smartly. Goodbye.